Good day, investors. My name is Lawrence, and thank you so much for watching this channel. A channel talks about investing in stock market and also how you can be financially independent. If it is your first time to watch this channel, please consider subscribing so that you don't miss out on other new uploads. And if you're a returning subscriber, welcome back. Today, I'm going to be talking about a topic that I feel is extremely very important if you're in stock market or you're planning to buy shares, because like any other business, any other ventures, you need to do some specific things right if you want to be successful. So also stock market is not any different. So basically I've compiled like 5 things that you need to do if you really want to be successful stock market investor. So without wasting any time, let's go directly to the topic. So I said how to become successful investor. So becoming successful investor is not an accident. Therefore, there are several things you need to do right to be successful. Definitely 100%. If you want to be successful investor in stock market, you cannot do anything you want and you think you're going to be successful. So you have to be organized, you have to do some things if you want to be successful. So number one, actually on the top, this one cannot go number 2 or number 3 or number 5. It has to be number 1. So which says acquire knowledge. Like any job, any skill, anything that you're going to do, you need a skill, you need knowledge, you need to education so that you perfect that job. Even stock market is not different, because there are some things you need to check, you need to learn, and you need to see if you want to be successful. So actually today 100% there is a lot of available information, both free and paid. Actually you don't need to pay if you have access to internet. You only have to buy data bundles, or if you have access to Wi-Fi to get every other information. I can say I never went to any investing school. All the knowledge I have acquired through internet, through our friends. So you can get actually investing knowledge for free 100% if you only buy data. So what kind of knowledge do you really need? Because not every knowledge will help you. So this knowledge we're talking about, I highlighted, is understand stock market. What is a stock market? A stock market actually is like any other market. The be it potato, be it meat, be it beans market. So even stock market is where stocks are sold. So like any other business, you need to go for a better, a good deal. So you need to understand a stock market, how a cheap stock looks like, how a bad stock looks like. So these are the kind of knowledge you need to know before you invest in stock market. So basically for the stock market, actually is could be easier than most of other business, because there are some few things that you need to run to get to know how you can benefit from stock market. So basically you need the basic understanding of stock market, what the stock market is, how does it work, who operates it, how you can benefit from it. So the basic things. Another thing is you need to understand, after understanding the stock market, is about the basic understanding of financials. I cannot understate this, because the more you understand the financials of the company, the more you know whether it is making a profit, you know where it is making losses. So basically anything has to make financial sense if you're going to purchase it. So basically even a stock, if it doesn't make any financial sense if it is making losses. If you don't understand their financials 100%, you need to know, so that by the time you're going to buy a stock, you know whether it is making profit or it is making losses. Why does it make losses? Why does it make money? So basically that's what you need to understand. You need to understand cash flows of the company. You need to understand the financial statement. You need to understand the balance sheet. Basically those are the three things, financials of the company, that you need to understand. The good thing with this one, actually, you need to like learn specific things, because most of the things are calculated. So for me, I can look at figures. I know this company is bad, this company is good, without even interrogating most of all figures. So basically that's it. Another third thing under the knowledge is understand the nature of companies. So for example, there are some specific companies or specific sectors which personally I don't invest in, because I've done research that they don't make sense, they don't make profit. For example, airlines, there are very few on African continent. It is only one company that makes profits, which is the Ethiopian Airlines. So I know if any company that is listing on a stock market and is an airline, I will not be going there, because I know most of them, they don't make profits. So that's how you have to know the nature of companies. For example, I know the financial companies, most of them, they make profits. So I would be very easily convinced to research about financial companies, because I know they make money. So for example, I know the companies like the media companies, currently they are under high competition from the personal medias. So I know this one is under attack and is not making profits, so I'll not be going there. So those are kind of things you need to know, the nature of companies, and do research. So if you know this kind of information, you're set to successful career in stock market. So this is the, you can say, the fundamental part of getting successful in stock market. If you don't have knowledge, if you don't understand the stock market, if you don't understand some financials, if you don't do research and know the type of companies that you're going to be buying, definitely you're set to fail. So that's number one. Let's go to number two. How to become a successful investor. Number two is long-term view. Anything that you do, actually, it's not only in the stock market, anything where you have a short-term view, those things, you do it in a hurry, you do it when you don't know, not caring, because you don't care it's going to be in short term. So stock market, you need to think long term, because stocks, if you maybe have a simple knowledge or detailed knowledge, you know they go up and down. So if, for example, if you remember 2020, if you follow the stocks, they went down up to 80%, some companies, up to 50 companies. So for example, if you are targeting that maybe you're going to buy a stock and sell it in 1 month or 2 months, I can tell you, you cannot forget this, because the stocks went down. Which means if you're selling, you would sell in loss. That's why stock market, you have to long-term views. I said markets go up and down in short term. Actually, if you're a good investor, when markets go down, it's the best opportunity to buy, because I remember actually most of my stocks, I bought them during the COVID because they were so cheap, yet the fundamentals did not change that much. That's why you need a long-term view, because stocks go up and down. So but you may think to sell it, by the time you want to sell them, you'll find that they are down. So that's why I say, for example, if you want money in short term, what is the long term? Maybe from 5 and above, you can say, okay, this is long term. If you want money in short period, 1 year, 2 years, I don't recommend investing in stock market, because you're set to fail for sure. For me, since almost 8 years, I've never withdrawn any single money from the stock market, because the more you leave it there, the more you get dividends, the more you will get to my point of to compound. So when you invest in the stock market, especially if you're a retail investor, you don't have enough capital. So if you don't have enough capital, definitely when you're getting those dividends and you keep on reinvesting, there is what we call compounding effect. It keeps on growing. The more it grows, the more it will make a big sense. So hard to know company in short time. Definitely, for example, if the company has just started or the company has just in IPO, like last year, there was a company that in Uganda that listed Airtel. It's very hard to know how it operates if you give it 1 year, but in 2 to 3 years, you will know whether it is making sense or it is not making sense. Actually, I can say this is the second most important point if you want to be successful in stock market, because as I said, when you have a short-term view in stock market, the stocks can go down and surprise you by if you need money, or you'll get in trouble by making losses. So please, if you plan to invest in stock market for 2 years, 1 year, 3 years, I beg you, do not invest, because I can tell you within East Africa, I know like in Kenya, Uganda, stocks almost every year there is a time when they go down. So if you're planning to get money in a very short time, I don't recommend investing in stock market. You can go to bills, you can go to money market funds where you can withdraw anytime you need money, and it is even giving you a good interest. So that's another part that you don't have to forget if you're going to invest in stock market. Definitely, I want to, if you're still with us up to this time and you're not subscribed, because I would ask you to subscribe so that we can grow our community for investing. So number 3 aspect is patience. It's almost related to short-term view, but they are slightly different, because patience, you might be a long-term investor, but when, for example, the stocks goes down, you sell it, yet you had planned, because most of the people actually tell themselves that they are long-term investor, but when something happens in the market, for example, the stock crashes without necessarily any fundamentals changing, you find people are panicking, people want to sell their shares, yet they said they are long-term investor. So if you're a long-term investor and the stock goes down, this is the best time to buy. It says patience pays but pains. Definitely, if you're not patient person, you don't need to be able to invest in stock market, because stock market, as I said, you need long term, and if you're not patient, definitely you will not last longer in stock market. Makes you avoid FOMO. FOMO, if you know, FOMO is fear of missing out. So sometimes, like this year, actually last year in Nairobi Securities Exchange, most of the stocks skyrocketed, went up. And if you don't understand the stock market, maybe you could have sold fast or you could have bought fast. So, and that is a very bad precedence, because if the stocks that are going up and you don't know why they are going up, when they go down, you'll be also scared and you find you're selling on losses. So for me, this time I didn't buy anything, because already know stocks are getting expensive. I didn't also sell, because I don't see anything good that I can sell to buy. So basically, you need to be patient, patience in stock market, because for example, if your stock goes up 10%, you sell it, and some stocks have gone up 100%, you would miss almost 90% of the upside down. So if you're, for example, you're impatient and the stocks goes down by 10%, you sell it and it bounces back, you'll miss by that 10%, you'll lose. So that's how patience is also extremely very important. So also it's the most important part of patience is allows you to make proper decision. You know, impatience most of the time will make you make rushed decisions. For example, it will make you to sell very fast if you're in a loss. At the end of the day, stocks, as I say, they go up and down. If you sell and in the near future comes back, you'll be regretting. So that's why patience is required in stock market. So number 4 another area that you need to be successful in stock market is buy what you know. Not only what you know, but those companies should be great companies. Actually, great companies, most of us, we know them, like in Uganda, like most of the big companies like MTN, Airtel, of course, Stanbic Bank, Equity Bank in Kenya and Uganda, KCB Bank. So those are like the common we know. But does it mean that because you know the company, you should be buying it? The answer is no. But when you know the company, first of all, you need to know the products. Knowing the company is not enough. You have to know the products. But most of the known companies, we already know their products. For example, when we talk of Airtel, we know it is a telecommunication company. When we talk of KCB, we know it is a banking company. We know their products. When we talk of MTN, we know it is a telecom company. So basically, knowing a company is not enough. You need to know what they invest in. You need to know what products do they produce. Are they good? Are they of quality? So you may know the company, but what do you know about the company? Because some companies are very popular because of bad reputation. You need to know a company because of good reputation, because the more reputation it has the market, the more pricing power it has the market, so it can even increase the price without being affected. So that's how companies make profits, because they have the popularity and also the pricing power. So know the products. If the company is great, definitely, as the first thing we talked about financials, you need to know, do even financials make sense? Because some companies are great, but they are not great stocks. In the future, actually, I'm planning to be analyzing one of the companies that is very big company, but doesn't make sense when it comes to investing in it, because it is a very, very expensive company. So knowing a company is one, but knowing whether it is profitable, whether it makes sense in terms of investing, is also another aspect. So easy to know when out of favor. Definitely, if you know a company is big, or it is doing well, when it starts declining, you already know, because you will see that the products are not in the shelf, people are not using that product, and definitely when you start seeing those signs, it means you will be out of the company. So by that, you reduce the losses. That's why it's very, very good. It's very, very important to invest in companies that you know, because when it start declining, signs start ringing in people's ears. You see that this company was doing a great, maybe it was pricing good, but now the products it's doing, they are not good. You find people complaining. So if you find people complaining, definitely at the end of the day, it will reflect in the price. If it reflects in the price, it will also reflect in the profits. If it reflects in the profits, the means it will decline. And when it decline, definitely when a company performs well, the stock performs well. If the company performs poorly, the stock performs poorly. So easy to value. Actually, public reputation itself is one of the most important valuation method you can use. So if the company is extremely very, very popular, it will be very, very easy to market. Their products will be easy to sell, they will be easy to buy. So that's why, for me, I don't buy companies that are not known, because most of the time it's very, very hard to market those companies. So one of the best valuation method is its popularity. If the company is very, very popular, definitely it's very easy to price, to do everything, to market. So that's why I say it's very, very easy to value. So that's number 4. And final part of this episode is keep it simple. Investing is not is not a rocket science. Investing in the stock market is very, very easy, but people tend to make it very complicated. Actually, one of the greatest investors said, actually, the arithmetic or mathematics of a primary 5 child, if you know how to add, if you know how to divide, if you know how to multiply, that mathematics is enough to understand the balance sheet, is enough to understand the figures in investing financials. So that's why I'm saying if something is very complicated for you to understand, I urge you, do not invest in it. Because for me, if I cannot understand, it means you cannot value it. If you cannot value it, you will not understand what it is worth. So for example, if you don't understand any company, if it is becoming a rocket science, I urge you, do not invest in it, because you will never understand how it works. So here there's a statement actually one of the greatest investors made, which is Warren Buffett. Actually, that investing, it needs temperamental sentiment rather than an intellectual quality. So to invest, to be a successful investor, you need a temperamental quality, not intellectual quality. What does it mean? Temper. You have had someone is short-tempered, someone is cool-tempered. So for example, if you have a good temperamental quality, which is not short-tempered, is what actually we had talked about before, like be patient. So if you're not impatient in stock market, definitely you're going to lose. But even if you're an intellectual, even if you're intelligent, but you have a short temper in stock market, you will not do well, because if for example, the stock goes down and you're intelligent and you say no, you're impatient in the stock market, you sell, definitely it will not stop you from losing. So that's what it meant. You need a temperamental quality rather than intellectual quality to succeed in stock market. So that's why it is simple. You don't need to be that intelligent. As I said, a primary 5 mathematics is enough to succeed in stock market, because it's about subtracting, it's about multiplication, it's about addition, no more, nothing else. There is no x, no much of the mathematics, because all the figures are being put to you. For you, it's up to subtract them, multiply them, and divide them, and see whether it makes sense for you. So lastly, on keep it simple is avoid anything complicated for you. Actually, if you follow most of the Ponzi scheme investments, they try to complicate things so that people think it's something complicated, something very hard. But if something is becoming extremely very hard for you, very complicated for you, definitely that is not good for investing, because as I said, the more you don't understand something, the more it will not be easy to get along with. So if it goes down and you don't know whether what is causing its downgrade, or it's causing its downtrend, definitely you will not know the reason, and it's very, very hard to value something you don't understand. So there are a lot of things on this. So for me, stock market, it's goes down, goes up. That's what you need to understand. You don't need any mathematical. You need to just basic mathematics to be able to value the company. So it becomes extremely very, very hard for you. Please learn away from it, because you'll make a lot of mistakes trying to understand something. Yet, as I said, stock market investing is a simple thing, and the more you learn about something, the more you study about something, the more it becomes more simple. So I cannot go very far beyond that. Of course, there are other things that you need to know, but the more you involve yourself in the stock market, the more you want to learn more, the more you will know that actually stock market is one of the simplest investment options, that you can make money without actually hustling that much, as long as you have money to invest in it. Definitely, if you have been with us until this episode and you're not subscribed, I would like to request you to subscribe, to share, and also hit the bell notification. And definitely, if you have any questions, if you have any addition, if you have any comments, any contribution, please don't forget to put it in the comments so that we can discuss about it. Have a wonderful day. Goodbye.